AMG family, Mondo here. Hey, just wanted to make sure real quick before we get started that you guys have subscribed to the AMG podcast channel. Go below if you can't see it, look a little, scroll down, whatever you got to do. Hit that subscribe button. It helps us immensely here at the AMG podcast. The second thing we need you to do is turn on your notifications. That way, anytime we drop new content, you are the first to be notified. That way we can grow together. We can learn in life together and do life together. All right. So with that said, let's get to it. What's happening, AMG family? What is going on? It's your guy, Mondo Grimes, and my main man, Craig Cooper, also known as Coop. Yes, indeed. Yes, indeed. What's going on, brother? How you doing, man?
Another day. Doing great. How about yourself?
I'm doing excellent. Doing fantastic, man. Doing great. Man, we are here, family, to have some fun, to talk about some important financial things, things what's going on in the AMG world. And I believe today, our friend Coop has some topics, right? Yeah, I don't even know what it is. He hadn't even read it to me yet, y'all. So y'all gonna find out the same time I do. All right. So man, let's dive into it. We're gonna have some fun talking about something that we do, talking about perspectives and ideas and maybe misconceptions or you're getting into. What are we doing, man?
Yeah, well, today we're going to talk about some misconceptions about IULs, as there are a lot, right?
Okay.
We've seen some of the negative social media posts, etc.
Yeah.
And there are a lot of misconceptions about IULs. I wanted to talk about a couple
Okay.
today.
All right. Cool. We can dig into that.
Yeah.
So for those who, are been around us, you know what IUL is. You're a customer. We've been helping. You've been rocking with us for a minute. If you've just found us on YouTube and you've been searching and you said, who are these two dudes? Well, we're talking about IULs, as Coop said, but it's an index universal life insurance policy. All right. It's one form of a permanent life insurance policy. And we're going to be talking about the things that Coop mentioned. But, I get that sometimes, Coop. I'll get a DM. Someone is like, hey, that sounds like it's great information. What the heck is an IUL? Right? What does it stand for? So that's figured out to break it down for those who are maybe new to the AMG fam. So, all right, let's dive in, man. Let's have some fun. What's the first misconception that we're gonna talk about, man?
Well, number one is IULs have a guaranteed cash value growth.
Oh,
Sounds too good to be true because it is.
ooh.
So, unlike whole life insurance policies, which offer guaranteed cash value growth, IULs have no guaranteed growth. The cash value in an IUL depends on the performance of the chosen index, right?
Yes.
Now, there usually is a floor to protect against market losses. Cash value growth is not guaranteed.
Because some of these floors are a zero,
Correct.
right? All right. Some are 0.25 or 1.25, depending on the index you pick.
Correct.
Okay. So we're cool. I love how you're doing this. We're splitting hairs, right? So for those who may not know, IUL, Index Universal Life Policy, is linked to the market. It's not in the market. Okay. It's linked to indexes. So let's just use the one everyone knows, the S&P. Okay. And say this particular index that your policy, the company has to offer, that allocation, you pick S&P, and let's say the floor on that one is 0. And maybe there's a cap of 12%. That's fair. We see that quite often, don't we?
Correct.
Okay, cool. So, Coop, you're telling me that it's not guaranteed because it could be a year where the market dips below 0. The IUL does not participate in that downward trend below 0. So we stop at 0. So you're saying that because it's 0, that is not a guaranteed return because you're at 0 that year.
That is correct. The only guarantee in that particular year is that you do not lose.
There you go. That's what I wanted you to say right there, my friend. Yes. Yes. Let's pause for applause right there. Okay. Because I know some people, check this out, Coop. Some people say, well, what if it's a down year? I'm not going to gain anything. I'm going to go 0. I'm going to be at 0. Yeah, but it's better than going negative 14. I'd rather be at 0 than go negative anything. So to me, that's a W.
Right.
It's called protection. So you can't say guaranteed because you're linked to the market and you could be at 0 because the market performed terribly. Your linked index is hitting that floor, stopping at 0. The market's down here, clowning around. You're sitting at 0. When the market comes back up, you link back to it and you participate in all the upward trends.
That is
Now,
correct.
oh, that's correct. Now it is guaranteed if you decide to take your IUL and select a fixed rate, say at 5%. Let's just use that 5 point whatever. That's guaranteed because you chose to unlink yourself from the market, unlink yourself, and say, you know what, just give me a cool five. Cool,
Mhm.
cool. Just give me a cool 5%. I don't know why I talk like that. Give me a cool five. All right, and now that's guaranteed. Is that right?
That is correct.
Okay. So, what's the encouragement, Coop, for people who are listening to what we just said? Because we're splitting hairs here. People can
Mhm.
can clip any part of this. See, I told you, Coop. You told me before. Hold on. Hold on. What would you say to the person that says this is too good to be true? How is guaranteed? Is it guaranteed? Repeat it for the people in the back.
There are no guarantees that you will make money. There are guarantees that you will not lose. All IULs do have a floor, typically of zero, between 0 and 0.25%. So in the case of market volatility,
Yep.
we'll go back to say 2008.
Ooh,
Let's say you
yeah.
had $100,000,
Mm-hmm.
right? In 401k, what have you.
Yep.
Market was down with 37%.
Yep. Oh, a little more like 39 change.
Yeah.
Yep.
39. Almost, let's round it up to 40. You just
Yep.
lost $40,000. Or if you had an IUL, your loss would be zero.
Yep. At zero. You have the same amount of money as you had in there last year.
Mhm.
That's a beautiful thing. That's a beautiful thing. So that's what's cool about it is that you're getting rid of that volatility. So I love that, man. You know, that whole too good to be true thing. I've heard that quite a bit in regards to IULs, but there's something I want to throw a little spice in here, Coop, if you're okay with it.
I'm fine with it. I love
Okay.
spice.
the 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 IRS codes. All right. I encourage people to do their research. IRS codes and tax citations. Okay. And there's a handful. Okay. The citations are TAMRA, TEFRA, and DEFRA. These are the abbreviations TAMRA, TEFRA, and DEFRA. All right. We'll put them in the description below, as well as the tax citations 101A, 72E, 7702. Okay. Those in particular describe why an IUL operates the way it does. It also gives you the parameters, basically the playing field of how they operate. Like, so if you play within the playing field, it is these are guaranteed features, okay? Tax advantage, this, that, and the other. But it gives you the parameters of how to build it, what has to be a certain way in order to leverage these benefits. So it's not too good to be true. You just have to have someone that knows what the heck they're doing to be able to play. Like, for instance, if I give somebody a pigskin, a football, right? All right. And I say, all right, take this and just start throwing it and kicking it. It's fun. You're going to enjoy yourself. Go get some good exercise. They're like, okay. And they just take and they start kicking around with no white chalk, no playbook, no plays, no X's and O's, no nothing. They just out in the
Right.
field kicking
Yep.
and throwing stuff. So that's probably terrible, cool. But you get my point though.
I
Like,
get your point. I get your point. You're just out there.
man, it's crazy. I think what has to happen is uh people need to do their research and understand why they operate the way they do, or find someone who understands it and can communicate that. Right.
Hmm.
It's so for instance, hey Coop, you ever like was wondering about anything in particular and then you met somebody and they got you hip to something,
Oh yeah.
something that you didn't know of before?
Oh yeah, for sure.
That was completely legit. You just didn't know about it.
Hmm.
And they showed you something that you could leverage for the benefit of you and your family. You ever had that happen before?
I actually have.
Is this any different?
Not at all.
Okay. So all we're doing at AMG, Coop and I are telling you, hey, look over there. Let me show you these codes and these tax citations in this vehicle. This is how it works. When you consider all things applied, this is how it works. Did you know about that? Well, no, I didn't. That's too good to be true. No, it's not. It's just called new. You didn't know about
Hmm.
that. I'm showing you how to operate with something and within a certain parameters that other people have been doing for decades that you didn't know about for decades. Okay. Now that you
Hmm.
know, it doesn't mean that it's too good to be true. It just means that it's just you didn't know.
That's it.
Right. So I'll highly encourage people to do your homework or find someone, a professional that can actually help you to understand how these tools work. So that's good, man. That's a little hot sauce, a little spice I want to throw in there. That's all. That's that. That's it. That's it. So let me ask you about I'm gonna kind of throw it back at you, man. Tell me about the too good to be true thing and how you feel, man, when you hear that.
Well, I feel like the person I'm talking to is uninformed.
Mm. And what are we trying to do when we're
We
talking to
are
them?
trying to inform as many people as we can. We are trying to inform the masses.
Exactly.
All right.
Yeah. Yeah.
There are a lot of people who don't know. 2 years ago, I didn't know it either. I had no idea what IUL was.
Man, I sat in a meeting of insurance agents, and there was one particular person that was hell bent on convincing all of us in the room that IULs are garbage. And as I was listening, he was describing, like he said, I'm saying this because of a policy I saw one day. And it did this and it did that and it did this and da da da. He's just going in. I mean, passion. You could tell he felt a certain kind of way about it. I mean, he was a little bit too much. Start sweating. It was like, whoo, slow down, chief. It's like it's not that deep, But what he was describing was an extremely poorly, if that makes sense, designed policy written by someone that obviously an agent that did not know what they were doing, sold it to a client that client ended up meeting the guy I saw, and the guy I saw met with the client who had a policy that was designed by an agent who didn't know what they were doing. So he's judging all of that. He's judging the product by that one policy or policies he's seen that were poorly designed and saying, okay, because it's poorly designed, this product sucks. Well, he didn't even say it was poorly designed. He just said the product sucks. Why did it suck, Craig?
Poorly designed, not properly structured, probably not properly funded.
Yep. Yep. He was talking like, well, it did this and it did that. I'm like, he sounds like, I know why I did that. I didn't say nothing. I'm like, okay, I know why I did that. Well, then it did this a year such and such. Well, I know why I did that because that's what. Well, when did it? I'm like, yep, because it's so I think that the key point of that is, all right, if it's too good to be true, find someone who knows what they're talking about, be informed, learn the codes. But also, man, it's kind of like saying, like, you ever heard that debate about term? People say, well, term is the best way. Then you get other people say whole life is the best way. Then they get this argument between term and whole life. You ever been in a conversation like that before?
Yeah. Yeah. Buy term and, invest the rest. Sure.
What's your just shoot from the hip, man? What's your thoughts on that? On this argument, not on whether you like term or whole life. I'm talking about the argument of which one is better. What's your thoughts on the whole argument itself?
Well, I mean, it's really a non-argument. You have there's an option. I mean, if you want it whole, I mean, you've got the guaranteed, fixed rate. And some may find comfort in that. However, just understand that you are leaving a lot of meat on the bone.
Man.
But if that's your strategy, fine, so be it.
One thing that I look at all the time, man, like you just said it, what's your strategy? What is your strategy? What are you getting that product for? It's crazy, man. It's like, well, so people ask me, which one do you like better? I said, depends on what I'm using it for. It's like, do you like a fork or a butter knife better? It's like, it depends on what I'm using it for. If I'm eating cereal, I don't want either one.
Right.
It depends on what I'm using it for. That's what it comes. Like, people they get bent out of shape. Like, well, I think term is better. It's still better. Well, I think such. It's like, yo, this is not like who's a bigger conversation. You know what I'm saying? Like, this is. It depends on what you want to use it for. What's better, a boat or a car? Well, that's how silly it sounds to me.
Right.
Yeah, it really does. It's like, why are we arguing about this?
Right.
And I know there's some very popular people out there that they've made it like what you just said. They've made it their mantra over the years, kind of Brainwash people. Let me say what it is. Brainwash people to thinking that that way is the only way. Man, there's 330 million people in America. Anybody talking about one way? Like,
Mm-hmm.
you serious? There's one way for 330 something million people? For real?
Mm-hmm.
No, I don't think so. I don't think so. But yeah, anyway, what's your second one, man? I can babble on forever on that. What's the second?
uh, Number two, IULs are for only wealthy clients, and this is far from the truth, Mondo. We know this to be true.
How do you know that to be true?
Well, because they have features that are often associated with financial planning for affluent clients, such as premium flexibility and potential for tax-deferred growth. However, IULs can be customized to fit perfectly within the needs of other income segments. Middle income clients love the idea of the flexible premiums.
Yep. That.
Right.
Well, okay, let's stay there. Let's talk on the you just said it on the middle class people. So the flexible premium, what's some other features that they enjoy?
Death benefit protection
Yep.
and the opportunity to accumulate cash value that can be used for future needs, such as college funding or tax-free retirement income.
That sounds sweet to me for middle class.
Mm-hmm.
That sounds sweet. Of course, it's got to be designed the right way. This whole just say the policy is designed the right way, funded the right way,
Mm-hmm.
structured the right way. Okay, so we got that out the way. All right, cool. So, all right. So what's another middle class interest for an IUI? Okay, yeah, retirement, some college money, some. What about if they just want to, if they have a policy where they've got some extra room in it and they want to just stack some extra money away inside their policy? Is that something they can do?
Absolutely. Absolutely. Now you have to be mindful. Um, you have a certain cap. And if
Mm-hmm.
you go above that cap, you now have what's called a modified endowment contract
Mm-hmm. Based upon how it was designed.
based on the design.
Yep, exactly. So, if you got a 10-foot roof, you can't be putting in 15-foot beams inside your house. You see what I'm saying?
Yep.
Then you got a problem.
Yep. Yep.
Okay. That's, vertical beams. You know what I mean? Like
That's right.
you got an issue. So, all right.
Now,
So
again, based on your strategy, a modified endowment contract is not the worst if you just really want to just keep dumping money into it
there's a
and
strategy
you
for
have no
that.
plan to take it out anytime soon.
Exactly right. Like one of the carriers we work with, they have a product that's designed to do that specifically for certain purposes.
Mm-hmm.
Okay. It's not a common, use and purpose, but it does pop up. It does pop up. That's for sure. So yeah. Okay. All right. So for someone who's middle class, they're like, hey, you know what, man, I work at the plant. I've got a good solid executive manager job and whatever. Um, maybe I'm former, I'm a military, I'm this, I'm that, whatever, you know, this is something that could utilize for them and their family, right? Yes or
That is
no?
correct. Yes,
Oh, okay.
absolutely.
All right. Let's talk about someone who's just kind of a young person. They're trying to get on their feet. They're
Mm-hmm.
really trying to build for their future. They're low 20s.
Mm-hmm.
Like, you know what? I want to do different than what my parents taught me, or my parents taught me to do stuff like this. Either way, and I just
Mm-hmm.
want to start getting my affairs in order early. Is this something that they can utilize?
Absolutely. Absolutely.
Why? Like why? Like why would someone in their 20s want to get an IUL? Well, for what?
But they're looking down the road. They're looking at the future, right? I sure wish I'd have known about this in my 20s.
Man,
The
what
amount
you
of money
said?
that I wasted.
What you said, man? Yeah, it's a lot of features, especially the benefit of being younger, right?
Hmm.
We know that people think that money buys insurance. It doesn't. Your health and your age does.
Yep, that's right. So the
Right?
younger you are, the healthier
Mm-hmm.
you are,
Mm-hmm.
presumably.
Mm-hmm.
Therefore, your cost of insurance goes down, which then means your cash accumulation increases.
Heck yeah, that's right. And here's what's funny, man. I'm gonna call it like it is, bro. Uh, we have to do better as a people. And I'm gonna talk to the black and brown folk right now. Okay, we got to do better at learning about these tools and educating ourselves on how other demographics have used these tools for eons. Okay, um, here's what's funny. I hear this a lot. Here, man, I'm trying to be like such and such, pointing this way. I'm
Mm-hmm.
trying to be like such and such, but you don't want to do what such and such does. You want to buy into the things that such and such buys into. You want to be like them, but you don't want to do like them. I'm done. I'm gonna get off that soapbox because I could go in, dude. I could go, Craig, I could go in. Like, we ain't gonna do that right now. Oh man. Okay. So young person. Now, what about I heard this. Babies, young kids, toddlers. Could is that something? Really?
That is something.
Wow.
Absolutely. And I believe 30 days old.
Yeah, it depends on the carrier, but
Depends on
typically
the
yes.
carrier,
Typically
right?
yes.
You can open up you can create a policy for a toddler. And if you can imagine, one of the things with IULs is it's a long play. So if you can imagine starting a policy on an infant and letting that policy grow for 40 or 50 years
Mm, mm,
with uninterrupted compound, interest.
man, look, bro. Let me share. I saw this video and it was so powerful. It was a guy that does what we do,
Hmm.
and he said he was talking about the Jewish community, and he was saying, and he's not Jewish, but he was sharing on this video about his Jewish clients and what their priorities are in regarding finance. And he said it's something that blew his mind and really taught him a lot. The number one priority, he says in this video about Jewish community, their priority financially is number one, generational wealth. Number one. The first thing they do when it comes to money is figure out how can they pay it forward. That's their number one priority. That's they're taught, conditioned, whatever you want to call it, to do that. Pay it forward. Okay. And I forgot the stat, but it's something crazy. It's like less than 30% of the population of the United States is Jewish, but yet they control over 60% of the wealth. Something I might be off in a percentage, but I'm close. I'm close.
Hmm.
That's the think about that. Okay. That was the number one thing was was that second priority is okay, now that we're taking care of the generational wealth piece, what we do have, how do we multiply what we have? They haven't gone shopping yet. They ain't bought a car yet.
Hmm.
They ain't gone to Macy's and Neiman Marcus. They ain't not done none of that. They ain't not in on Amazon. They looking at generational wealth and number two, how do I take what we have after we set up the generational wealth funnel? What do we do with this to make it multiply like gremlins? How do we add water to it and watch it go? Like, what do we do?
Hmm.
They figure it out. They put it in play. They execute. Then they go to number three, and there's like five different things he goes through. But focus on those number two, dude. The first two things have nothing to do with the individual that's holding the money.
Right.
It's like, what can I do for those come after me? All right, cool.
Hmm.
What I have left, what can I do to multiply this? Because we do more for my family and what also and give more. They're not talking about, oh man, I can go get a new whip. Nope, they're not
Hmm.
saying that.
Hmm.
Man, I'm about to be sharp on Easter. I can go get a new suit or two. Wear one for Bible study and for service. You know what I'm saying? Like, they're not doing that. You know? So it's fat. I'm gonna have to find that man and send it to you. It is a powerful, powerful video. Um, so anyway, so generational wealth, building up, a baby. Matter of fact, I had a conversation. I didn't tell you this yet, man. I had a meeting with a new client yesterday who is looking to insure him, his wife, and his new baby. His baby's 2 weeks old. I said, we gotta wait a little bit, but got you. He's like, oh, as soon as we're able to, let me roll with that. I'll take care of my wife and I first. Awesome.
Hmm.
Man, love it. And he's young. He's in his 30s.
Mm.
Isn't that awesome, man?
That is, the when you talk about generational wealth, when you start that young, and if they continue that,
Hmm.
you look down the
Yeah,
line, a couple of generations down the line, and the whole family is taken care of.
bruh. It's so cool. And the amount of financial freedom that they're affording themselves to be able to raise a child, but also setting the child up for the future is phenomenal, man. So I love that. I
Mm-hmm.
love it. All right. I'll stop yapping, man. We can go forever on that again. Three. What's your third one?
Third
This,
one, IULs are a quick and easy way to build cash value.
you know what's funny? That makes me laugh, man. It's okay. So let's go backwards. Let's back the truck up. If someone says that IULs are quick and easy to build what? Cash value? Is that what it said?
That's
Okay.
correct.
Well, if you believe that, you also are saying this is too good to be true. So, you know what I'm saying? So you're believing something that's not true, that is quick
Mm-hmm.
and easy. It's not.
Mm-hmm.
So that's why you say it's too good to be true, because you're believing
Exactly.
something that's not true.
Mm-hmm.
So yeah, I mean, you're actually right. You know what I'm saying? Because what you're saying you heard and by like or whatever is like something that's it's a lie. It's not true.
Mm-hmm.
It's false. So, anyway, not to split hairs, but yeah, you get my point.
Mm-hmm.
What about well, give us your thoughts on that, man, because for me, that hits a hot spot. I'll get there in a minute, but when you read that and when you read it earlier, how does that make you feel when you hear that inaccurate information about IULs, man?
I mean, it makes me feel like, I'm compelled to get out here and kind of expose some of these,
Yeah.
untruths,
Yeah.
right? No, they are not a quick way to build cash value. And if you think that, then you are right. It is too good to be true.
How
Um,
how often does a policy get the allocation credit? Whatever index you pick, how often are the IULs credited?
every year.
Oh, that's not quick.
No, not at all.
That's not quick.
All right.
So every year. Cool. So that okay, I'm gonna go there. I'm gonna get my soapbox again. Here we go. I'm gonna put it up. I can stand on it. All right. Why do people believe that or hear that and believe it or believe that statement? Like what where's that stuff coming from, Coop? That why are people thinking that? Who's saying that?
The detractors, i.e., the haters. It's just what it is.
It
Let's
is
call it
what
what
it
it
is.
is.
Well, also, okay, can I add in person number two?
Mm-hmm.
Not just the haters, but the number two is uninformed and uneducated life insurance agents.
Well, there's that part too.
Yeah, I call my own field out, but yes, that's true. But just like there's great doctors, there's some that aren't so great.
Mm-hmm.
Just like there's great contractors, like there's aren't some that aren't so great. So it kind of comes in every field. So to be
Mm-hmm.
fair, okay. But you got some of these YouTube folks, you know, got their license 3 days ago. They get a microphone and a camera, and I'm licensed, and I'm gonna go on and tell everybody the things that I don't know about IULs, but I'm gonna act like it is true.
Mm-hmm.
I'm gonna just talk and spew a bunch of mess because I need to, generate some business. And if I gotta say this to get people to contact me, and if I gotta say this to get people to contact me, even though I don't know if it's true or not, it sounds good. I'm gonna just say it so my phone will ring. So man, I love people who are on the other side, the clients. They hear me say this stuff because it's like I'm kind of like calling out our own people, but it's true though. It is what it is.
Mm-hmm.
And if there's any agent watching this and you mad at me, I'm talking about your behind, right? Seriously, So that's the thing. It's like, man, do I know everything? Coop, do you know everything, like everything about IULs, every single detail?
That would be a negative.
That would be a negative.
I'm
No,
learning
neither one
every
of us
day.
do. We know a lot, and we're always learning because of different circumstances, different products, different things within carriers and the performances, the allocation. There's so many moving parts.
Mm-hmm.
So we have a phenomenal back office team that as they learn, they communicate to us. We're
Mm-hmm.
all learning together so we can help our client the best way possible.
Mm-hmm.
We will never claim at AMG to know everything. We don't, man. We just have access to people that know the information that we may not know at the time. We know a great amount, but man, I love the fact that we got a phenomenal financial library of people who can give us the answer because of the eons and years of experience, or whether they say, you know what, they're really good at finding the answers. Either one. So yeah, man, I this is crazy because Coop, I remember when we first started, you had a lot of questions. And that's why you're so informed right now. I'm going to say that one more time. But not questions in the sense of cynicism or skepticism. You had questions out of curiosity, out of a quest to learn, out of wonder, right? And not no out of positivity. You asked. I love that about you, man. You ask so many questions, but that's why you know a lot. You're seeking information to gain knowledge, so that when it's time to apply, you've got a pool of things to pull from, man. So not to give you a pat on the back, but you know what I'm saying. Get you.
It's okay.
Yeah, 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 yeah. I love that, man. So anyway, yeah, I'm kind of again, you see what I'm drinking here is another tea with caffeine in it. So there you go, on 12 again. Let's hit one more, man. You got any more on your list? Let's hit one more.
Well, I do have another one. And we talk about this and we say it. But again, there's a little bit of misconception. IULs is a set it and forget it product.
Oh,
I mean, it is,
yes. It
but it
depends
ain't.
on the strategy.
Again, it depends on the strategy. One thing is, even if you have a kind of a set it forget it strategy where I'm just going to put this money in, I'm
Hmm.
never going to touch it. I'm just using it for my death benefit.
Hmm.
You still have to every year. You still have to monitor, your policy.
Of course.
You
Yeah.
may want to switch allocations depending on the volatility of the market.
Right. Absolutely.
In the early years, you have to make sure that it's properly funded, again, and properly structured, so that it doesn't lapse.
And maybe your, financial professional that you work with, or us, or whoever, they can say, hey, you know what? We've got some new indexes available.
Mm-hmm.
We've got ones with bonuses, or we've got some with some multipliers. We've got this, we've got that. And, let's talk about it. How are we feeling about the market? Here's how we feel about it. Here's what's going on. Here's what we know. What have you seen? How are you feeling? Where's your risk tolerance? Blah, 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 blah. Okay. Based on all that goodness, we then settle in on what allocation we're going to go for over the next 12 months,
Mm-hmm.
or allocations, or we're going to split it up, diversify a little bit, maybe, maybe not. Okay. That's huge, man. That's huge. But again, that goes down to like the strategy, though, like you said.
Mm-hmm.
So let's identify this. The two, maybe one way that is set it and forget it, because someone says what they desire to do is they don't know this yet, but they just say, hey, I'm looking to do this, Coop. What
Mm-hmm.
kind of person would be a set it and forget it kind of person? Or strategy? Not person, but strategy.
Someone with a very low risk tolerance.
Okay.
Someone that is just looking for cash accumulation,
Mm-hmm.
or just a very high death benefit.
Or whatever they can fund or afford, I would imagine, right?
Of
Um,
course. Right.
yeah, I mean, yeah, they just, hey, I want an IUL. I've got some cash accumulation building.
Mm-hmm.
You said, okay, yeah, you're right. Death benefit,
Mm-hmm.
I got that. Cool. So I've got insurance, that I've got cash accumulation, and if I need access to it, cool. All right, whatever. All right, and that policy covers XYZ for my family,
Mm-hmm.
whatever my goals are. All
Right.
right, cool. Let me just pay my premiums and keep it moving.
Mm-hmm. Yeah.
Okay, very cool. What about someone who is the opposite? They're not just a yearly allocation person. They're actually, you know, someone who would be doing more, like active with their policy on like a monthly, quarterly, biannual basis. What kind of strategy is that person?
Well, based on our model, we would call that, the bike. We've got, um, the car, the bike, and the jet.
Mm-hmm.
That actually, this in this case would be the car. So you want to kind of dump some money into it when you have, extra.
Mm-hmm.
You may want to pull from that policy. You may want to use it for project funding.
Mm-hmm.
You say, you know what, I want to buy a car, next year. I want to dump as much money into this so I can pull it out and
Mm-hmm.
utilize that money to purchase a car or real estate. You typically want to take money out of it and put that in another, you know, cash yielding
Right. Yeah. Yeah. You
project.
don't want to go to the mall.
No,
No.
no, no, no,
Yeah.
no.
Yeah.
This
Yeah.
isn't, the new Jordans came out and I want to go to,
Right.
you know.
No, I see what you're saying. You want to put that into something that's going to give you more yield or either some sort of cash flow in return, some sort of ROI if you can. Okay. So, and then of course, then there's the jet people. This is the blown out to the gills at their level, max funded IUL. We put in like a 5-pay, some depending on the product. There's now some new single premiums, just one-time pay, blow it to the gills, keep it moving. And they have different purposes. Some of them like, hey, I'm that's for my retirement. I put a bunch of money in, max funded. I can't put anything else in it for the rest of my life, but that thing is going to kick. I've got some moderate allocations to it. So maybe some of my allocations like 50% fixed. So I know I'm getting a return every year. And the other 50%, I'm gonna play a little bit and maybe some more volatile type indexes. And, or maybe I'm gonna do that and pull some money out and buy a piece of property, all kind of fun stuff. You get more active with it, right? So that's cool that you said that, man. I think that everything we've talked about today should hit someone somewhere, whether you're the middle class individual, someone that's just getting going in life, whether you've been around for a minute and you're like, trying to get some, put your pennies together and really do something in later years. That's cool too. Maybe you're older and you want to set something up for the grandbabies, maybe for your daughter. Maybe you're trying to set up the baby, again, the 1, 2, 3 month, 4 month old or whatever, a toddler. This is so many ways to cut this. With everything that we talked about, Coop, now do you see why we talk about you can't really label it and say it's just one way to cut this thing? It's not. So many different ways, man, based upon the situation, your goals, your dreams, your functionality, your funding, your age, all kind of stuff.
Yeah.
All kinds of stuff. But I'm gonna tell you, man, that's why we're here, is to educate, have some fun, have some fun and walk people through this stuff, Coop. What would you suggest if I'm listening to us right now? What would you suggest if I'm like, this is interesting, I still have questions? What would you suggest that someone does?
Reach out. Give us a call.
That's it. Right? That's it.
It starts there, right? And you may have questions. We have answers.
Absolutely. You'll be able to find our information down in the description. You'll be able to see us there. We'll put our business line down there. We'll put our email addresses. We'll put all that fun stuff. Please make sure you subscribe to the channel, hit the like button, hit the share button, send to other people if you feel like they need to hear this information. We work with a lot of different types of people. We love it. That's one of my favorite things is that we have basically the United Nations of clients from here to here, man. And we absolutely love it. Well, hey, Coop, we probably should roll, man. Let people get back to the day. We're about 40-something minutes in, so let's keep it moving, brother. Thank you for joining me today, my friend.
Yes, sir. Always a pleasure. Always a pleasure.
Yes, indeed. All right, guys. Thank you, AMG family. We will see you on the next episode with AMG Podcast. Y'all be good.